Welcome to the BuyBox Experts podcast. We bring to light the unique opportunities brands face in today's e-commerce world.
Hi, I'm James Thompson, one of the hosts of the BuyBox Experts podcast. I'm a partner with BuyBox Experts and the former business head of the Selling on Amazon team at Amazon, as well as the first account manager for the Fulfillment by Amazon program. I'm the co-author of a couple of books on Amazon, including the recent book, Controlling Your Brand in the Age of Amazon. Today's episode is brought to you by BuyBox Experts. BuyBox Experts takes ambitious brands and makes them unbeatable. When you hire BuyBox Experts, you receive the strategy optimization and marketing performance to succeed on Amazon. We also support investors with due diligence services. Go to buyboxexperts.com to learn more. Before I introduce our guests today, I want to send a big shout out to the team at Getita, a global leader in Amazon FBA auditing and reimbursements. Getita analyzes your Amazon data, reconciles your FBA inventory, and files claims for reimbursements on your behalf. Check out Getita.com to learn more. Our guests today are Dlugosch and Brian Strini. Oliver is the co-founder and senior vice president operations of Razor Group. Prior to Razor Group, Oliver did marketing for Fortuna Düsseldorf, a German soccer club team, and was a senior consultant at McKinsey & Company. Brian is the SVP North America at Razor Group. Prior to Razor, Brian worked in venture capital and private equity M&A roles at such firms as Anheuser-Busch, Goldman Sachs, and Quintana Capital Group. Oliver and Brian, welcome and thank you for joining us today on the BuyBox Experts podcast.
Thank you for having us. Glad to be here.
So let's start with the inevitable. FBA private label brands are a hot commodity today. What do you believe has generated this recent interest in these businesses that have been around literally 2 decades? Why now? What's happening? What's causing all this excitement?
Yeah, James, in a word, COVID. In the 6 months from March 2020 through August 2020, we saw the growth in online e-commerce in all industries, in all e-commerce industries, catapult itself basically 5 years quicker than what would have happened over those 6 months absent COVID. So this enormous, once in a lifetime, really demand shift, if you will, from brick and mortar to online has redistributed the buying patterns of consumers, and hence the market share to marketplaces such as Amazon and others around the world.
So private equity is asking questions and saying we now need to have some part of our portfolio in e-commerce. As a company that's exclusively focused on e-commerce, what makes you different than a traditional private equity company looking at brands?
Yeah, the operations side of it, and I'll let Oliver jump in here as well, is that, and coming from a background in private equity, when you're acquiring something in private equity, while you may majority own that business, you're really hands off. It's more of a laissez-faire approach to let's let the company run, let's let the company do its thing, let's let the management team do its thing. Versus us, when we acquire brands, we are instilling Razor people, Razor employees into those brands to run those operations. And Oliver, if you want to add on that a little bit, please feel free.
Exactly the right point. So when we look at those brands, we already think with the operations in mind, with the growth in mind, with the product in mind, right? So the M&A piece is only one to the puzzle. And then there is this long-term aspect of understanding the market, understanding the product, understanding the customer, and having a clear vision where this is heading for future growth.
I've had the opportunity to work with Amazon-centric entrepreneurs for nearly 15 years, and they're an odd bunch. I would love to get your take on your experiences so far in terms of what's drawn you to this particular segment, this particular industry, and what are some of the types of people you're meeting and unusual or unexpected events around meeting these people.
I mean, I find it really, really fascinating how deep the love for the brands is and for the products with these sellers, right? You can tell that there is so much passion going into those brands. And that translates into a very impressive speed at which these brands really master and dominate niches, right? Sub-niches, small categories, and really become leaders in those areas. Then, on the other side, what surprises me then is that some of the growth that would be available to those entrepreneurs is not captured right away. So sometimes we even see that entrepreneurs are not as brave as going forward as entrepreneurial as they could be, with a very great product that obviously meets the demands of the customers.
Brian, you're talking to folks early days when they're looking at potentially selling. What are you seeing in terms of odd perspectives or different types of enthusiasm?
Yeah, so I think, one thing I always enjoy having the conversation with sellers about is over the last, for example, 50 years in the direct-to-consumer business, you have big companies like a Walmart or Target, right, that have taken away that market share from the small mom and pops. We've seen that throughout the United States, right, over the last 50 years. Well, what the e-commerce industry has done, and especially what COVID accelerated, was the redistribution of that market share, if you will, back to those mom and pops, right? I mean, they're gaining market share away from the Walmarts and Targets. And that's, while a seller may not think about it that way, when you have that conversation with them, you see the light bulb go off, right? And they're like, wow, that's really cool. I'm excited that I can play alongside someone like a Walmart or Target, right? And you see the enthusiasm also come from when they introduce a product and all of a sudden now it has 5,000 reviews and it has 4.5, 5 stars, right? And that excitement of, wait a second, I did this, and so that's really, I think, what you're seeing is these just normal people becoming, these great entrepreneurs almost unexpectedly. It's like they found something within them they didn't know was there, and so it's really fascinating to talk to a lot of these people. You hear some great stories. Again, and everybody's like, okay, I kind of started this as a side project, gig, and then all of a sudden, I had to take an Amazon training course to understand how to sell on Amazon. But then all of a sudden, it just blew up, and I can't just control it anymore because their sales are so great, and I'm having to think about, okay, wow, if I want to sell in Europe, I have to deal with VAT issues, right? Now I have to think about, okay, is my 3PL the exact 3PL I should be using? And they're in a whole new world. And so it's just really interesting to see that maturation, if you will, of a person into a full-fledged entrepreneur business owner.
If I go back, let's say 10 years ago, somebody could literally go on Alibaba, find some product, white label it, put it on Amazon. If they knew how to do listings, that they could start to get some sales. The world has changed and continues to evolve, and it's more competitive around getting your products launched. And yet companies, husbands and wives, standalone person, a school teacher with the side gig, as you said, maybe starting this $1 million a year business. And the Amazon platform gives them that possibility of being able to sell a lot. But a lot of these folks aren't necessarily versed in what it takes to build a brand and what it takes to build something that's going to be meaningful enough that it's not just a transaction on some kind of a widget. And so as you think about how do you grab that enthusiasm that's there among these emerging entrepreneurs as they find manufacturing partners, as they find the opportunity to try stuff out and see if consumers are excited about their products, how do you look at all these different potential brands coming your way, and how do you figure out how to evaluate them in a way where you say there really is something long-term viable here?
Yeah, I'll let Oliver take that since he's primarily responsible for long-term viability here.
Sure. What we really foster, and where we put a lot of emphasis on, that we partner with these sellers, right? It's not that there is just a single transaction where we acquire a brand and after that it's bye-bye. But during the entire process of of discussion and understanding the brand, we work very, very closely with them to actually, adopt and understand this passion and all this this thinking that has gone into the brand. And then going forward, taking that energy and taking the roots of the brand, which is always a great product, right? And then applying the deep functional expertise to take it to further growth, to take it to further levels.
When I look at the many, many dozens of aggregators who are out there, some of them are getting a lot of press because they're raising a lot of money. And certainly your company has continued to raise large enough amounts of money that the press gets excited. How do you think about this process of finding brands to evaluate and figuring out where you're going to source your deals? If I look back to August, July last year, the broker world was a very, very active space, but we're now at a point where literally every broker deal gets picked over by dozens of potential investors. How do you think about the world of finding the next great brand to buy?
Yeah, great question. We've been very, very fortunate. Our head of technology, Shrestha Chaudhuri, is an amazing, intelligent, incredibly smart person. And she's created this proprietary software tool that we use in order to scrape the entire universe of Amazon sellers.
Yep.
And by our last count, this measures in the several hundred thousands of unique sellers on Amazon. And of that, we really only focus on about 5% of those sellers. And of course, we're looking at things like customer ratings, reviews, categories that they're in, what is a potential revenue per ASIN that we're looking at. Yep. So all these filtered factors, if you will, that really help us narrow our search. And we rely almost, I'd say 99% on either an outbound approach to that, as we're reaching out to the seller proactively once we've filtered and found that, or we're also starting to see some networking effects now where we're getting some good referrals into our business. The broker avenue is something that we've looked at, but it's definitely not our go-to avenue. We definitely find, in our opinion, great quality assets at great value through our organic process.
We had some FBA brands on our podcast recently, and many of them had been targeted by investors. They weren't looking to sell. And lo and behold, they got this random call from some random investor saying, you have an amazing business and I'm very interested in buying it. Let's have a conversation. That's a little bit disarming for an FBA owner, for a brand owner who's busy running his or her business. Brian, you're probably involved in some of those calls. I'd love to get perspective on how do you break through the initial surprise that somebody who's off manning their own little business gets some random call from some daddy Warbucks with a big checkbook. How does that work? And
I can completely agree that would be very disarming. We don't do cold calling per se. A lot of our outreach is via email, right? So it gives the business owner time to process, obviously, what we're trying to communicate, and really puts the impetus on them to come back to us, right? And so I've never been a fan of cold calling. We are 100% empathetic that these business owners are wearing many hats, right? You have to be an accountant. You have to be a supply chain expert. You have to be a pricing expert. You have to be an Amazon expert, right? And so
You're scaring me. Do I really need to do all that? I think it's time for me to sell my brand.
Right. Exactly. Well, exactly. So that's, we really try. We put a lot of emphasis, and I've been, very involved here in the U.S. as far as saying, okay, let's look at the exact communication we're putting into those emails and putting into our outreach program, if you will, to make sure that, obviously it is a little bit of a numbers game and we want to reach a lot of people, but at the same time, we do need to be cognizant of their time and what we're proposing, because there's also the human aspect is a cliched term, but what I'm trying to get at is someone has raised basically a baby here, right? It's their baby, it's their brand, And so for them to all of a sudden think, oh, wait a second, I should be selling or divesting of this, that is potentially a life-changing moment. especially with some of the dollars that we've seen and the multiples we've seen in the marketplace lately.
Yep.
So it's something, we want to be, again, communicative, but at the same time respectful of the demands that they're being placed on them as a business owner.
So you buy the brand. Now Oliver gets involved, Oliver and his team. And Oliver apparently is the guy that's going to take over my baby and run with it. So how does that conversation go, Oliver? And how do you get people comfortable with the idea that you're actually better equipped with more tools than they might otherwise be equipped with today?
Very good question. Very good question. And that's where the entire operations team comes into play. The process of picking up the conversation with the seller, with the business owner, starts very early in the process. And in some cases where there might be particular questions about what we intend to do and what growth levers we want to pull, then we also have our functional experts speak to those sellers about these topics, right? That might be a PPC expert, that might be a logistics expert. So we are very flexible at discussing these topics with the sellers and making them understand what our plan is, and that we do have in-house these experts that will bring the additional value to the table. So it is a flexible process if the business owner wants it to be. And I can only refer to my team, to really look at each individual aspect of that business. And as Brian said, you have to be an expert in a specific field. And we do have these experts who have been doing this for years or decades and can really employ these gold standards to any aspect of the business, be it advertising, be it logistics, be it customer support.
So we didn't spend much time at the beginning of the discussion talking about who Razor Group is and just how big the company is, but I'd love to hear a little bit more about when you're buying U.S. brands. What does the process typically look like in terms of the initial operational discussions versus when you're buying a European brand? How might the conversation initially diverge from that U.S. brand? Oliver, your thoughts on that?
Actually, maybe Brian, you take first the aspect of the acquisition, and then I can take over on the operations side. Sure. Because in the outset, it is a bit more similar, I would say.
Yeah, the conversation in the U.S. really revolves around a few pillars that we have when we're talking to a seller about acquiring their brand. The first and foremost, obviously, is the international expansion. As I mentioned earlier in the call, a lot of sellers in the U.S. have not had the capacity or the resources to really think about all the VAT and the country regulations you need to satisfy in order to sell on the other side of the Atlantic. We obviously have a huge operations staff that are very talented that have already solved all those. And so it's very easy for us to take their products, expand to Europe. And every seller is interested in that. And I think as part of, like we say, the seller journey, right? What sellers, when you talk to the real entrepreneurs, right? The real entrepreneurs, yes, they want to sell their company. They want to have a nice payday. But really what really motivates people is to have a global brand. To say, wait a second, I created that. I can see that whether it be online or on shelves around the world.
Yes.
Right? And Razor is able to give them or to fulfill that dream, if you will, by doing that international expansion. And I think one of the other things, at least here in the US, that we really, and we do this in Europe as well, is that we really think about is, okay, while we target brands that are predominantly selling on Amazon right now, ultimately we're platform agnostic. Once we acquire a brand, we want to sell a brand on the different e-commerce marketplaces, both domestically and internationally. We want to sell that brand into brick and mortar stores, right? And again, we're developing that functional expertise in Oliver's group. We have channel experts, if you will. So, and we already have contracts with certain brick and mortar players here in the US. And so it's very easy for us, again, to expand their product to places that ultimately they may not have been able to get to, or at least not have been able to optimize that sales channel.
So Oliver, you've convinced me. I've sold you my brand. I'm a US brand. How does that conversation differ from I'm a European brand?
To be honest, it doesn't differ too much, because in the center of that discussion, there is, of course, the product, right? And then there is understanding how the business is run up until now. And yes, in a European setup, there is all these different countries and all these different regulations that you have to adhere to. I think in the US, this is less pronounced. This is less of a topic in those discussions. But I would say that in general, it's a similar idea of, how is this brand going to further grow, and what are the actual topics that you will tackle going forward. So I think it is quite similar.
Yeah, and let me add to that real quick, is that, I touched upon taking US products to Europe. Well, in effect, we're creating a transatlantic bridge, right? Because we're now taking European products to the US. And so that conversation is just reversed in Europe, but we're already having several conversations. I just had one this morning with our 3PL and our tax experts as far as, okay, let's make sure we do this properly as far as taking European goods, selling them in the US. How do we get those abroad, or get those on shore? How do we make sure we're accounting for those correctly? So it's really a bridge that we're building, and to become this global, e-commerce provider, if you will.
So I want to shift gears here and talk about brands that you have now acquired, and you start getting your hands dirty, managing those businesses. Oliver, I'd like your thoughts on what do you wish those brands had done differently to better prepare for the inevitable sale and then hand off to another operational team?
Very good question. Very good question. So I think in general, it's best practices of running a business. That's what we really love to see when we acquire a business, right? We have seen it all, actually, the entire range, from all of the processes just being in the head of the entrepreneur and codified nowhere, all the way down to every single standard operating procedure, clearly protocolized, with many systems working together with almost no interference of the seller at any point in time. Really a real nice clockwork, if you will. And we're seeing both ends of that spectrum. So whenever we have an asset that is nicely prepared in that sense, it's really, really easy to then onboard and grow further, of course. One very particular topic that is highly relevant right now is the topic of inventory, right? Because whenever we acquire a brand, we immediately go into growth mode. We want to further expand the brand. And that's something that you could think of very early on in the process. Can I prepare that kind of a transaction, if you want, by having enough products in my 3PL or at Amazon, so that that an acquirer can immediately go into that mode.
How do you do that when half the world is waiting for boats to come from China?
At least in Europe, we have the advantage of other modes that we can leverage. For example, rail or even truck. So that's an alternative that you could pick here.
Yeah. The other one other, I think, very important point that I want to mention if you're thinking about selling your Amazon business, make sure that the financials are in order. And what I mean by that is we're typically looking for at least the past 24 months of a profit and loss statement. And it's, again, going back to, we obviously know sellers are wearing a lot of hats. Maybe accounting or finance is not the most important topic at the time for them. Completely understandable, but it makes the process much easier, quicker, smoother when we just have a great P&L statement, if you will.
Yes. So the question has come up, I don't know how many times, from brands that I've talked to around, is this a gold rush? Is it going to end? Should I sell my business now? What do I need to do to hold off 6 months? How do I think through when is the right time for me as a brand owner to take that call? When Brian calls or emails me and says, I'm interested, okay, sure, let's have that discussion. How do you think about, is now the right time versus sometime in the future?
Yeah, again, great question. It's a conversation I have multiple times a day. with sellers. And I really try to provide them both sides of the coin, if you will, right? And so I'll do that here. The side of the coin that says it's probably not the right time to sell. If you're launching several new products and you feel extremely confident that you're going to double revenue, double earnings in the next 6 months or a year, it's very hard for someone like Razor or any of our competitors to give you full value right now for that. The irony of that, though, is you'll be shocked to hear, James, that I've never talked to one seller who thinks their business is not doubling, right? Is not
of course,
bounds, right? I mean,
actually, it's going downhill, and I need to dump this as fast as I possibly can.
Shockingly, we've never heard that from the hundreds and hundreds of calls that we've had, right? So, but here's the thing: for us that are a little older, that have been around a couple business cycles, we do know that sales growth at least will decline. If not, perhaps sales themselves will decline. And we're already starting to see this. And I think this is a very important point, and I'm flipping over to the other side of the coin now, is that there was a COVID spike. We all know this in sales, right? We see it in almost every business we look at. How does the industry, Razor, and our competitors as well, value your business, right? We look at a trailing 12-month basis, right? Basically on earnings. Now, COVID started in March, April, if you will, of 2020. So now that we're in June already of 2021, those first months of COVID, March, April, May of 2020, are starting to roll off that trailing 12-month equation, right? So now what we're seeing is that equation is getting smaller every month. And if that equation is declining, that means we're likely to pay a lower multiple. And so you have to think to yourself, okay, my sales may be still growing, but on that trailing basis, if they're declining, is maybe now a good time. Did we already see the 52-week high of the stock, if you will, and now are we on the downtrend?
Right.
That's something to think about. I think the other couple global issues that we really want to think about is that I'll give you one issue here in the States and I'll give you a global issue. The one here in the States is Walmart and Target. These people are not stupid. They're very, very smart. They know they've lost a ton of market share over the past year and a half, right? Well, they're going to get it back. Well, how are they going to do that? I predict there's going to be a huge amount of sales over the next 6 months in the stores. Why would they do that? Because they want the foot traffic back. And they have the financial wherewithal to sell products at a loss, at a losing margin, just to get that foot traffic back in order to cover their fixed overhead, right?
Yes.
So I think we all need to be aware of that Walmart and Target are not playing around. They're going to come back. They're going to come back very, very strong. And so that's the domestic issue here in the States. The global issue, and we're seeing this all over the place, is inflation, right? Everything from metals to commodities, pulp, resin, everything. I don't care if your product's made of plastic, made of metal, you're going to have inflationary pressures. That's going to hurt your margins. That is going to have someone like Razor or even our competitors say, I can't give you as high multiple on your business as you want because your margins are under pressure. So again, these are conversations we're having every single day. And it's really important for sellers to think about these things when they think about timing.
So let's spend a minute. I want to talk more about Razor. When I, as a seller, hear the word Razor Group, what should I be thinking about that company versus any other company that's in the same space looking to buy and aggregate Amazon businesses?
Yeah. You want to start? I'll follow you on this one.
Yeah, sure. So first off, I think every seller should think, well, this is actually a global firm, and this is a firm, a company that is at heart omnichannel, and as Brian put it, platform agnostic. So we do think, as we come from that place, across marketplaces, across geographies, not only limited to Europe or the US, but actually thinking globally in terms of the distribution of the goods, and then also from a platform perspective, similarly that we are not limited to Amazon, but will go beyond that.
Yeah. And let me just I'll add to that is that we really pride ourselves on creating an ecosystem with our sellers. if you will. We're looking to form partnerships. We're looking to also acquire knowledge. So when we start talking to a seller and we take them through that journey of potentially divesting or selling their business, is they're involved every step of the way. They're giving their insight, their knowledge, their strategy for growing their brand. And we're looking to acquire all that. We are definitely not a company that says, okay, sell us your brand, go away. And that's an okay business model for some people. That's not a business model that we embrace. We embrace we want you to be part of the Razor family in some form or fashion going forward, even if that's, hey, we just catch up once a quarter every 6 months. And because what we're also seeing is these entrepreneurs, they want to sell their current business, and they want to start a next one, right?
Right.
And so we offer them the chance to leverage our knowledge and our expertise once they've sold a business to us to help them grow their second business, right? We want to develop that long-term partnership with them. We want to feel like they can give, myself or Oliver, whomever, an email or a call and say, hey, I'm thinking about this issue, or I've got this question about PPC, or I've got this question about the 3PL. Can you guys help me out on this? And of course we can.
How do you think about owners sticking around? I mean, do you have long earnout periods, or do you keep some of the owners around for a while to?
Yeah, so we're, from a financial incentive, we're pretty standard with the industry. And again, I think it's no secret that most of the industry is about a 2-year, 24-month financial incentive or profit share, if you will. We also try to be flexible in the sense of during due diligence, we really think about with the owner, okay, does it make sense to have some sort of, again, is it a consulting agreement or an informal contract for them to help advise us on long-term growth of that brand?
Right.
I think, again, it's tough to always, understand that and have an arrangement that works for both parties right at the beginning. Once we get into due diligence and we really understand the nuts and bolts of the business, if you will, it's easier to understand the desires of each party. But at the same time, the word I always use and I will always continue to use is we're flexible. We want them to feel great about the partnership. We want to feel great about it. So whatever we can do to foster that, we will.
Yes, and no matter in what shape that kind of collaboration or future cooperation comes, we always see great benefit in it, right? We always see that even if it's just once a quarter that we connect, there are some very interesting and helpful tips from the entrepreneur, from the seller, that we can then also leverage in day-to-day operations of the business. So it's definitely always good to keep in touch.
I want to wrap up our conversation today by asking you, how do you see investors getting their money out of the investments they're buying? We're seeing high multiples, and at the same time, we're seeing a lot of these private label brands. They normally have an 18 to 24 month time frame of being able to actually exist in that state on Amazon. And so, as an investor, you've got to be doing something to be able to get, be able to pay out more than a 2 multiple if the brand is otherwise only going to stick around for 2 years. How do you think about this dichotomy of we want to buy it and we see value in it, but at the same time, how do we make sure we're not overpaying and we've got a clear path for growth that will help us recover our investment?
Yeah, and I'll start with the front end of that, and I'll let Oliver follow up with the back end of that. And you said it specifically, James. You can't overpay, and you have to be disciplined in your investment approach with these brands. We are seeing some crazy multiples out there.
Yep.
And again, rehash on it is with this COVID effect, you have to be very careful if you're buying something at a 3x today, that your EBITDA is not getting cut in half next year, and now it's obviously a 6x, right? That just doesn't work. And so we have to be very careful on the multiples we pay. We have to look at the finer details of the income statement as far as what are the margins, what's the marketing expense, what does the supply chain look like in the business? And all those factors go into paying a fair but appropriate price for the business.
Right.
And then, of course, we do several things on the operations side, and I'll let Oliver get into that as far as what we do to maintain the cash flow we bought, but then also grow it.
Yeah, exactly. And the point is, when you acquire a good brand and a winning brand, there's something to it, to the product that makes it so successful. And what we do is, we take it further and further, emphasize that aspect, taking it to other channels, taking it to other geographies. So I don't think that, a lifetime of a great product is just 18 months or 24 months, but actually it goes way beyond that if you do not stop, investing in your product, developing new iterations, new innovations. Because I think when you actually bring it to those other geographies, platforms, invest into marketing, into brand building, into customer communication, then you can actually elevate that further.
Oliver and Brian, thank you for joining us today on the BuyBox Experts podcast. For those of you interested in learning more about Razor Group, please visit razor-group.com. Join us again next time on the BuyBox Experts podcast. Today's episode is brought to you by Getida. Getida is a global leader in Amazon FBA auditing and reimbursements. Getida analyzes your Amazon data, reconciles your FBA inventory, and files claims for reimbursements on your behalf. No obligations, no hidden fees. Just Getida recovering your money. Getida helps you get your money back into your pockets so you can focus on investing in more inventory and growing your business. To learn more, check out Getida.com. That's GETIDA.com.
Thanks for listening to the BuyBox Experts podcast. Be sure to click subscribe, check us out on the web, and we'll see you next time.